And then I didn't like university, right? To put it shortly,
It was too boring for you.
I mean, even back then when I was not very financially savvy, so I didn't read any books, right? That sparked me. But I even back then I knew that it felt like a bad investment.
Oh, okay.
The degree, but of course, I had thoughts of quitting uni. And especially in my kind of degree, it's not required.
What were you doing back then?
International business, right?
I see.
Basically, I mean, no one cares. Put it that way. No one cares about the degree. I mean, sorry to anyone with international business degrees. It's not that you are useless. It's just, in my humble opinion, that that field. I don't know why that field even exists. Right?
Probably is.
Before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.firl.co/free. Welcome to the very first FIRL Podcast,
Woohoo!
The best place for long-term stock investors. So, I've listened to many podcasts, and as great as some of them might be, sometimes they take too long.
Yep.
To get started on the podcast. I'm looking at you, Yamcha Sessions, right? So I'm going to go straight into what this podcast is going to be about. Okay, and really it's about our story, right? How did we get started investing? So don't worry, we're not going to talk about our life story, like our dating history or lack thereof.
Grandmother, grandfather story. No.
Yeah, who our moms are, what our family. No, we're not going to go there. But we are going to talk about how or the conditions that led up to us deciding to start investing. That part of our story, not the whole story.
Yep.
Right? Then we're going to go into why we pick value investing as our preferred method of investing, right? When there's so many other options out there.
Yeah.
And then third, we're going to share with you some of the surprises and the myths, quite frankly, that we would have never thought of before we started. Right? Okay. So, John, you want to start off? How do you get acquainted to investing? What do you think of it when you were a young chap? What prompted you,
I guess I will start off with a very chance encounter with someone giving me or introducing me. She didn't give me the book. God knows I can't even remember her name.
Yeah.
She was my senior in UTM.
Okay.
So she gave me a recommendation of a book, which was Kiyosaki's book, Robert Kiyosaki,
Okay.
Rich Dad Poor Dad. I think I was 19. And what that really opened up was my understanding of how, in a way, the financial world works. And understanding that by the myths that a lot of people have about having a good job, having a good education actually brings you financial success. And I think that was the first stepping stone to me changing my mindset. What happened after that was I tried to learn anything and everything I could about investing.
Okay.
And along the way, when I first started working, I burned through 25,000 ringgit.
Wow.
Yeah. I think it was my first year. Yeah, it was my first year into working. I was encouraged by a colleague of mine to open a brokerage account.
Was that all your savings?
Yeah, literally wiped out everything I had. And what was worse was that I was starting to buy into properties as well.
Okay.
So we'll talk about that probably in another podcast about our mistakes. But
yeah,
I was virtually dabbling into unit trusts, learning about commodities, learning about trading and all that kind of thing. But I got really greedy and I burned through 25,000 ringgit.
How did that happen? And did you you tell your wife?
Nope.
So unless you watch this podcast, she won't.
Yeah,
She
unless
won't
you
know.
watch this podcast, she
Okay.
knows I lost money, but I don't think she knows about the amount and the magnitude of it. So my colleague even joked, you just burn away your baby's milk formula money, So,
Yeah, man.
Yeah, 25K. There's
Imagine
a lot
if you took that money, invested it in Dutch Lady.
Oh yeah, man.
Milk
Dutch,
formula.
Dutch Lady was, I think, about $19 then.
So it'd be about more than double now.
Yeah.
So that 25,000 would be about 60,000,
Yeah, that's right.
65,000, something
That's
like
right.
that. Okay.
Yeah. So after burning through this, I another chance encounter. I mean, I think I wouldn't call it divine intervention, but probably just
Mm-hmm.
guys paying it forward in their lives, and I've truly benefited, and a lot of gratitude to these guys. So there was this lawyer I played badminton with regularly every week, and he somehow chanced upon me looking at some stock prices
All right.
in the supermarket, and he said, "John, are you investor?" I said, "Yeah." And he says, "Are you a value investor?" And
Before that, why were you looking at stock prices in a supermarket? I thought you're supposed to be buying stuff.
oh yeah, I was waiting for my wife while she was
okay,
shopping.
right. Okay, good.
Yeah,
Right. Yeah,
so
understandable.
So, yeah, you need to kill your mind out of boredom, right?
Of course.
Yeah. So he just said that, "Oh, are you a value investor?" And I said, "I don't know what's that." And he said, "Have you heard of Warren Buffett?" I said, "Yeah." Have you heard of Peter Lynch? I said, "No." And that's where the conversation led to a longer conversation, because he invited me over to his office the next day. And that's where he introduced me concepts of value investing. And, and he gave me titles of books to read on value investing. And to tell the truth, that was the fire that lit it for me, because here I was, having tried some kind of a technical analysis. I couldn't understand. My friend gave me a book on Japanese candlesticks.
Ichimoku. And
Yeah. I was like, I'm an engineer. I think I should be able to figure out this.
Yeah.
Nope. And probability of success is almost like a toss of a coin.
Wait, when you lost that 25,000, were you like looking at the screen every day?
Yeah, I was hooked to it, because I was virtually day trading.
Wow.
So I would buy, I even remember some of the counters I make money on, and some of the counters I lost money on. So one of the hot ones was this thing called KNM in the heydays, right? I bought it at 3,
Right.
and I probably exited at 30 cents, somewhere there.
Okay.
Axiata was, I think, a counter I made money on. So I went in at 37 cents, and then exited at 45 cents. But I was literally glued to the screen. Every time outside of a meeting, I would I'll just log on to my trading screen and then try to figure out, I don't know what kind of, probably was naive, not knowing what I was doing, thinking that when I look at the screen, I could have some control on the price.
Yeah, it's the same kind of mentality.
Yeah.
I know it might seem a bit weird to compare, but the way I would compare it would be like, when people play cards, especially if you're Chinese, then you choose the right card.
Yeah.
And then you pray, and then you open it slowly, because that's gonna affect, right? Obviously.
Correct.
And I think it's the same kind of
It's
mindset.
the same, and then they hold it out slowly, and then they try to
Yeah. It's like ace.
Ace. Yeah.
But then
yeah.
Okay.
So this guy's name, he's a lawyer. His name is Thompson. If he's listening to this.
So wait, this is after you really lost the 25,000.
This is after I lost,
okay.
right? And he just told me about all these concepts, and thank God I was a ferocious reader. I just started researching, reading, and I realized, right, another roadblock hit me was, after reading all these books and concepts, right, I couldn't really put theory into action.
Right.
It's concepts, but then I needed guidance or some kind of a structure to tell me, hey, this concept literally means this is how you apply it. And I think that's where I'm a believer that even though you're a ferocious reader and you can you're an actionable person, right? I always think that you can shorten your learning curve by having someone to guide you. And I think I've benefited a lot from guidance and
beginning with Mr. Thompson.
Yeah, yes, exactly. Right. Because you can read as much as you want. You can try to mimic all these formulas, like, for example, there were examples in the book about forward PE,
right?
About returns on invested capital, returns on equity and all that, right? You can put it into an Excel sheet, but you don't really know how to make sense out of it. I don't know whether yeah. So that kind of guidance actually really helped shorten my learning curve lah. Yeah, some kind of structure. Yeah. What about you, MJ? What? Yeah. How do you get into investing?
So for me, it's the year is 2015. Right?
Okay.
So I am
about
at
5
that
years
point
ago.
of time, a year and a half, not about a year, less than a year into my university degree.
Okay.
And then I didn't like university, right? To put it shortly,
it was too boring for you.
I mean, even back then when I was not very financially savvy, so I didn't read any books, right? That sparked me. But I even back then I knew that it felt like a bad investment.
Oh, okay.
The degree, but of course I had thoughts of quitting uni. And especially in my kind of degree, it's not required.
What were you doing back then?
International business. Right?
I see.
Basically, I mean, no one cares. Put it that way. No one cares about the degree. I mean, sorry to anyone with international business degrees. It's not that you are useless. It's just, in my humble opinion, that that field. I don't know why that field even exists. Right?
Probably is to rhyme with IBM.
Yeah, it's IB.
IB ma?
Investment banking. Yeah. So that's what international. Yeah. So anyway, I thought, what am I doing here? The things I'm learning, I can get online, and people online can explain it a lot better. And it was really weird because, and no offense to my old marketing lecturer, she had never done marketing before. Right? She'd only done lecturing on marketing.
She's been in the academic sphere all her life.
Yeah, I mean, I can understand that if you're a math professor, right? Because math is by and large a cerebral activity, meaning you just use your mind.
Yeah.
You got a piece of paper, you can do math already.
That's right.
You can't do that with marketing.
Yeah. You need practical experience.
Yeah. So I thought, why am I here? Right? But then I knew that if I'm going to quit, what am I going to do? I got to be interested in something. A lot of the things that I was interested in, like, for example, politics, philosophy, and even economics. Many of you listeners might be surprised that economics is not a very useful degree.
I think the perception about economics of being useful is that there is a Nobel Prize attached to it, and I think that's the perception that is actually. Oh, if you're economics, you would know how to make money. You would understand fiscal policies and all that kind of thing. But
no, you see that even if you do know fiscal policies, so what?
Yeah,
there's only three options for you really if you understand fiscal policy. And for those of you who don't know, fiscal policy is just how a country spends its tax dollars. What job do you have? One, become a lecturer again, which is not a bad thing.
Yeah, in a way.
Right? But it's not in the private market.
Yeah.
Number two, if it was private, probably in some sort of think tank. Right?
That's right.
And all the ones that are good are not in Malaysia. Right?
Yeah,
I mean, not that the think tanks in Malaysia are bad, obviously, but you don't get the same kind of prestige. Or you become the finance minister.
Oh, yeah. What about banks? I thought economists hires banks.
Maybe as an advisor.
Banks hires economists,
But for a bank to hire you as an advisor, I think there are only two conditions where they will even consider. One is you are a very old guy.
Very senior, very experienced.
Yeah, which, as you know, if you got white hair, you automatically you're smart, right? Or number two, you have the contacts. Right? People know your dad.
Yeah.
Sorry to interrupt this podcast. I know it's a little bit annoying, but I want to tell you something that I think can be really helpful to you. I can tell you're really interested in the stock market and want to learn more about it so that you actually know what you're doing, especially when today things are getting more complex and complicated. That's why we came up with the Stock Investing Blueprint, or SIB. It's our signature e-learning program that teaches you how to pick the right stocks most of the time, buy and sell it at the best possible time, and manage your stock portfolio systematically. It currently has more than 10 hours of content and it's growing. You'll also be part of a group of like-minded investors that can help speed up your learning process. To hop on the program, click on the link in the description or go to learn.firl.co/courses/SIB. So, what, like, is it intellectually stimulating economics? Yes, but you see, that's the thing. I can get a lot of that info. In fact, I learn more through online videos.
Yeah, PragerU, for example.
Yeah, I watch PragerU. You know, it's pretty good. I mean, it's slightly a politically conservative YouTube channel, but that's where I learn a lot of about economics.
Yeah.
I can read books like Economics in One Lesson by Henry Hazlitt, which in my point of view should be the de facto textbook for economics.
I have to agree.
Yeah.
Yeah.
So I mean, a lot, Thomas Sowell and all these guys, you guys can go read it yourself. But so the things I was interested in was not things that was monetizable. I knew they had value because, I mean, not only are they stimulating, very smart people write about it.
That's right.
Very accomplished people write about it. You think of, philosophers, political scientists, etc., etc. But again, especially in Malaysia, it's already not even no. When I said, hey, I was interested in doing PPE. Have you heard this thing called PPE? No, not property, plant equipment. Not your protective equipment for.
Actually, PPE. I know a very famous guy who does this. Is actually Khairi Jamaluddin. Yeah. KJ. Yeah, he did PPE in Oxford.
Yeah. So if you do that kind of degree, then you can be that kind of person, But it's literally 1 in 30 million in Malaysia's case, right? Or 36 million now. So I was in a conundrum, right? I knew I had the ability to understand all this pretty complex stuff, yet it's not monetizable. So again, I'm going to repeat, right? Complicated, but not monetizable. So my challenge was to find something complicated and monetizable. And that's where I actually watched a video online about this guy called Peter Schiff.
Peter Schiff. Okay.
So Peter Schiff, if you all don't know, SCHIFF. I don't really follow him now, really, but this guy talks a lot about economics, talks a lot about investments, especially when it comes to precious metals like gold.
Okay, commodities. Okay.
And he talked a lot about interest rates. So that was when I was like, oh, that's something up my alley, and I learned about it. So I was watching a lot of his videos, consuming it, because it's like I struck gold, right? Then this time I struck diamonds. Right beside there was a video by this guy called Preston Pysh.
Oh, yes. One of my favorite channels to follow.
PRESTON PYSH.
Yeah. What's his channels called today?
It's called Preston Pysh, I believe, today.
Yeah.
But he runs a podcast called the Investors
Podcast.
It's a really good podcast. You guys can check it out.
Yeah.
And back in the day, he didn't have a podcast. What he did was a series of videos that was recently posted. At that point, that was recently posted, right? Less than a year ago. Called Buffett Books.
Yeah.
And he would explain about value investing, the Warren Buffett style value investing, over, I think, 40 videos. So he talked about bonds, P ratios, discounted cash flows and all that.
Yeah.
And that was how I began.
I see.
That was when I was like...
That's where you found your love spark, your love life.
And from then on, it was... I didn't really need to understand why I needed to invest, because I knew that at the end of the day, I needed to make money in some capacity. I always knew that, right?
Yeah.
But that was the thing that gave me, those videos gave me that beginning.
I see. That spark in a way.
Yeah, that spark.
So interesting that you brought this up about the need to invest. It was at that point you were probably still living with your parents, right?
Early 20s, about 20 years old.
20 years, yeah. But at the same time, you wanted some kind of a mental challenge.
That's right, yeah.
At the same time, you wanted it to be practical.
That's right.
Yeah, but do you think that differs from a lot of other people? Because people that I talk to, most of the time they have a responsibility on their shoulder to somewhat make money, and they see investing as somewhat as a means to an end. If you get what I mean?
Yeah.
Yeah, and I think that's where it's slightly skewed to people don't really want to put in that work and effort because it is not actually a passion for them. They see it as a means to an end, slightly different from both.
Yeah, that's right.
Yeah, and I think that's where we understand that some people just want it plain and simple.
Yeah.
We also understand that some people want to have that kind of mental challenge or the thrill of understanding business, the thrill of understanding how capital allocators actually can leverage on time, money, resources to actually create wealth.
I think that is true. I wouldn't say I'm a person, and maybe I've not even shared with you in private before. I wouldn't say that I'm a person that really respected money when I was growing up. Meaning, I wouldn't say I saw it as an evil, but I saw it as an annoyance, kind of like, especially when you're young and younger and idealistic. You know, people who are more idealistic tend to look at money with, disrespect and disdain.
Is this a switch? Is this a black, white kind of thing?
Yeah, they feel like money is in the way.
Yeah.
And that's what I felt, right? And until I realized that why money existed and why it has to be the way it is, then I realized, hey, whether I enjoyed it or not, and to be honest, again, it might surprise you that I didn't really talk about money before age 20.
Yeah.
It didn't matter me. So I a lot of stories I hear of investors on that, it's very typical. Now, just because it's typical doesn't mean it's bad. It just means that it goes something like they lack money.
Yep.
Right? And so that hunger drove them to learn about money, whether they liked it or not.
Yes.
And then they ended up liking it because they were good at it.
Correct.
So I didn't have that path, right? Fortunately or unfortunately, depending on how you look at it.
Yeah.
So that wasn't really an issue. But I do think that once I understood the role of money and why it's important to invest, save money and all that, that I forced myself to learn a little bit more about it.
I see.
Because I've come to realize that when you learn about money, it's almost like when you learn the basics and the principles, it's almost like a superpower.
Yeah,
where,
exactly.
You know, when I was younger, I couldn't really strike a conversation with just anyone willy-nilly. But now, because I understand money, not saying I'm a good conversationalist, but if I were to strike up something about with someone, money would be a default, and everyone understands that language.
Everyone will somehow find there is a commonality to it.
Even a communist.
Yes, exactly.
Even a communist will say, I hate money, but we can talk about money.
Yeah. No, it leads me to a point I want to share as well about I couldn't figure out the relationship that money had with people. Because I remember the story I told you about why I had a neighbor and he only had like probably Form 3. And
I remember this story. It's a really good story.
He was selling Electrolux vacuum cleaners. Back in the day, there's no such thing as Lazada or Shopee, You virtually sell vacuum cleaner door to door. You start knocking, right? And I couldn't fathom because here I was looking at my dad, taking up night school classes, studying up like mad just to get a university degree. And all he got was a measly salary for a teacher. Now, no pun intended, teachers, I have the most respect of teachers. And I think they're really underpaid, overworked, a bunch of people. But I couldn't fathom that equation, if you get what I mean, MJ. It's like, here you have someone who was not academically inclined and yet could understand money better than my parents.
Yeah.
And I think out of that curiosity, I also had this perception that people in order for you to be successful money wise or material wise, you had to somewhat be cunning. I think the word
you need to cheat. Yeah. If you have money, you're a cheater.
Yeah, you're a cheater. That's the belief. It's this unspoken belief. Maybe it's because of probably either upbringing or friends around you that money is evil.
It's a form of resentment, would it be first, man?
Yeah. I think it's a fair statement to make. A form of resentment, and somehow that bias actually forms.
Right.
Where I got really interested was that the equation of studying well, getting a good job, and all that did not really equate to financial success. Really intrigued me,
Yeah.
And as some of the listeners might know, and probably for those who don't, I'm really interested in technology. That's why I chose the path of being an engineer.
Yeah.
But where I really fell in love with investing was that technology on its own, without commercial viability, does not make sense.
It's a very similar story to my point about idealism, right? Just mine was from the perspective of politics. Yours was the politics of philosophy. Yeah. Yours is the perspective of tech.
That's right. I mean, you could have the best tech in the world, but there's no user.
Yeah.
What's the point? No one's going to buy your product, or it can't be produced cheap enough and all that. And I'm trying to link it back to our story about investing.
Yeah.
And why we love investing is because we may come from an angle where understanding about money gives you some sort of a power or leverage, right? But more importantly, we really love the mental challenge of it.
Oh, yeah.
And because if you think of it, investing, it's a plethora of different fields.
Yes.
Psychology, economics, human behavior.
It's a liberal art.
It's a liberal art. And at the same time, it's something that is monetizable.
Pays a ton.
Yeah. And if you do it well, and I don't know whether it surprises, I think both of us are not surprised at all, but if you go to banks or even some of the investment houses or fund managers, right, they love hiring technical people. Why? It's because there is a certain methodology in which they think, and it's all related in a way. I'm not saying that a technicality gives you an edge, but there is a similar pattern to it for understanding investing. So, yeah, maybe I would ask this question now, MJ. After you got hooked, and after you made that switch over, that you felt that investing was something for you, what were the resources that you think were available to you that made it easy for you to pick this up in a way?
YouTube,
Number
right? One, YouTube. I didn't have a lot of people, and that's really the next segment, the next section of my story.
Yeah.
But really just YouTube and books, right? You can get off Kindle, you can read, you can highlight, and you can learn. And then maybe you can, go on forums and then comment or read comments, and then you learn from there. But I did feel that was only one part. It felt just theoretical. There was no practical aspect, especially if you're living in Malaysia.
Yeah.
Right? You don't get too much online content like we do today.
That's right.
For Malaysian stocks or stock investing.
Yeah.
And so that's where I joined my first company, right? Equity Tracker.
That's right.
And that's where I met you.
Yeah.
And that gave me, a good platform to meet people like yourself and all the other people, all the investors, the CEOs, the AGMs, and all that, to kickstart the practical side of investing. And that was when I felt, that's where the confidence to take action came in.
Really took off. Okay.
Great.
Yeah. I think the struggle for a lot of investors is that it's a very lonely journey.
Absolutely, yeah.
And in a way, I would say that the resources were much more abundant today.
Of course.
As compared to during my time, I don't think YouTube existed when I first started. When did YouTube start?
I think it's 2005, 2006.
Okay, so yeah.
I can actually search it up.
Yeah,
keep talking.
Yeah, because I remember when I first started learning about value investing, which is my career started in 2006. I relied a lot on blogs and books. That's it. I did not really have video resources. Probably I did not know how to use it. No one showed that to me. And I was completely blinded by the resources of YouTube probably at that time. And probably even when it started, I don't think they were in abundance.
Yeah, and when YouTube started, it was just a bunch of people having fun.
Yeah.
Making funny recordings of themselves. They also didn't know what it could become.
It could blossom into today, right? Yeah. So next.
By the way, the first YouTube video was posted. It's about a zoo, 19 seconds long.
Okay.
And it's 15 years ago.
15, so that's 2005. Yeah.
I guess now we can talk about, so that's how we got into investing. That's how we realized the importance of investing and things like that. Now it's investing. So why is it that we chose stocks and value investing? And of course, I think we need another podcast to explain everything.
That's right.
But in a nutshell, why value investing?
great question. I have to give some context before I
Sure.
answer that question. So remember earlier I said that I was just dabbling into almost everything. And
It's called the Rojak portfolio.
yeah, it's a Rojak portfolio. I actually started into properties investing almost at the same time.
Okay.
And the reason why I was attracted to it was a few of my colleagues were into it. And actually, I made the first financial mistakes. I think we will cover that into another podcast. It's a long one. But literally, I bought into a house that was bigger than I could afford.
Yeah, okay.
And to dig myself out of that mistake, I spoke to a few friends, and one of them actually suggested I refinance my house. Now, don't rush out for those listeners. Don't rush out and do the same thing I did.
What's refinancing, John?
So, what I did was I took a loan of a certain amount, let's say X amount, and because the property value after a few years probably increased, right? Let's just say I took a loan of 400,000, and the property value was at 500,000. If the property value went up to 600,000 and you're entitled to take a 90% loan, now you can take a loan of 500,000. So that difference, the delta, is actually the refinance amount that the bank will actually give you in cash. And that was what I used to actually start off my stock portfolio.
So you borrowed to invest?
Yeah, I borrowed to invest. And my advice to a lot of people is that please don't do that unless you know what you're doing.
Yeah, and this is the thing I think Buffett said quite a bit. Warren Buffett said that if you are smart, you don't need to borrow.
That's right.
If you're stupid, you definitely don't need to borrow.
Yeah, so because of property, and at one point I had 4 properties.
Okay.
And I'm synthesizing the story here so that I can come back to stocks, is that I realized I was very lucky because I had consistent cash flow through my salary. I mean, in oil and gas, I was paid okay, decent. But then again, there was a cash flow crunch. In a sense, my strategy was to buy under construction properties and flip them upon completion. And after the 3rd property, you cannot secure a 90% loan. You can only secure a 70% loan.
Back then, I believe now it has relaxed a bit, right?
Yeah. So I was literally having cash flow problems. And when I, in parallel, was doing stocks investing, I realized that because all of these investments, if you do it on a cash upfront basis, money that you don't need, you actually have the leeway of patience. You're not coerced into either liquidating the property or liquidating any of your investments at a desperate time when you don't have cash flow. The second thing is that the realization that in properties, when you have an exit plan, it's you can't exit in portions.
It's a very slow exit.
Yeah, it's a very slow exit. Even when there was a ready buyer for my last property that I sold, right?
Yeah.
End-to-end transaction took me about 6 to 8 months before I could even touch the money.
You know what, John? At least not as bad as a divorce lah. Consolation.
That's right. And more and more, so I dabbled into property investing. I dabbled into unit trusts. There was one time I actually bought gold, paper gold, but very small portions, right? Just to try it out. And I felt that the characteristics of stocks was, for me, tremendous. It's fantastic. Businesses are so dynamic. You learn about different technologies, different platforms, different business strategies, different business models, and all this divisibility, all this exit strategy was something that was more and more my cup of tea. And therefore, I completely exited my properties investment and fully went into stocks. What about you?
Well, for me, it was relatively easy. I had the privilege of... So I'm a bit of a rebel. So when I learn my uncles, my dad, and all that, every time they talk about investments, it's always, I would say 100% of the time, but like 80%, 89% of the time, it's properties. So of course, like the good son that I am, good boy that I am, whatever the older ones do, I don't want to do. Yeah, I don't want to do. So I...
Anti.
Yeah. So, but and it's not a joke, right? That was really a part of the motivation. But adding to that, what appealed me about stocks and eventually value investing was that all the others did not satisfy the curiosity or the intellectual stimulation that I wanted, right? And for, let's say, properties, we keep talking about properties because it is the most common in Malaysia.
Yeah.
For those who don't know, 75% of the typical Malaysian's wealth is in their house.
Yeah.
This is in stark contrast to, let's say, in Europe or US, where it's actually the other way around.
Yeah.
It's about 25%.
Correct.
And then the remaining 75% is in what we call financial assets.
Yes.
Which is basically stocks, and
more money market.
stuff.
Yeah.
More liquid kind of assets. So I just felt like properties is, I mean, you guys know, right? Gabe behind the
screen.
PC, right? You asked me to set up this podcast studio, right? It's really, basically I don't contribute, right? For good reason, because I contribute more by not doing. So can you imagine if I have complications with a camera and lighting? Imagine a house.
Yeah.
Like, my goodness. And then people can tell me, hey, you can 40 houses. Like, what?
Hey, but I know people who are passionate about it. I mean, they love that kind of investing because they like to see the physical formation of a house, in the sense that they love the dirty work of interior design. They love that they have a concept that comes to life. And by all means, please. Yeah.
And to be fair, that is a very good point, because a lot of successful stock investors, right, they will actually tell you that you have to move beyond stocks to get some sort of gratification.
Correct.
Like, because stocks, especially if you're good, right? Stock investing, if you're a good stock investor, right? You want to know whether you're a good stock investor? You just ask yourself how boring it is.
Yes,
the more
that's
boring it is,
right.
the better you become.
That's right.
So, because it's very boring, it's very uninspiring. Because you're just trading, essentially, you're trading a piece of paper
Correct.
on the screen.
Yeah.
And then you make money. 50% today, 15% then.
Yeah.
You don't get that emotional component like you do with property. So that is actually a downside, the only downside to stocks. But of course, every other aspects, stocks are better in my view.
Yeah.
And for me, is that it just suited me, because, hey, you can just make money by sitting down.
Yeah.
Right?
Less interaction with people, less argument.
Yeah.
Can you imagine properties if you're an introverted person, right?
Yeah.
And then your tenant kicks up a fuss. I guess, knowing you, MJ, you would rather avoid a confrontation.
Yeah, it is a solo game.
Yeah.
And for me, in terms of confrontation, it's not so much because I want to avoid a ruckus.
Yeah.
It's more that I know whatever reasoning or counter arguments I'm going to provide is not going to be accepted anyway. So I just stop wasting my time.
Correct.
Just do whatever I want to do.
Yeah.
And so that's really what stocks is.
Yes.
Right?
Yes.
Of course, this is not to be confused with, let's say, fund management, which in and of itself is another. It's stocks. Yes, it's stocks. But you have to deal with a lot of people, right? So it's better to be an individual investor. So that's for stocks. But why value investing, right? So for me, value investing was the way to go, because it was what worked. For the longest time. And I did read a part about Jack Schwager's book.
Jack Schwager's.
I think Market Wizards.
Yeah,
Trading, something like that.
That's right.
And he said something very interesting, which was the reason value investing has worked for so long is because it doesn't work all the time. Okay, so here's why it is. You see, here's the thing, right? If you have a strategy that works all the time, and by all the time, I mean decades.
Okay.
What happens is that people will flock to that strategy. Right. So let's say value investing, just to give a hypothetical example, let's say it's about buying low PE stocks. So what actually ends up happening? Let's say everyone started doing value investing and they buy low PE stocks. The PE won't be low.
Yeah, because everyone's rushing for the same.
Yeah, the price will go up. So then what we call your alpha or your edge evaporates.
Yes.
So what's unique about value investing is that you are buying companies that are either unpopular, or you have a view of the stock that is unpopular.
That's right.
Or more unpopular, more contrarian.
That's right.
So what that means is that you will look like a fool
for the short term.
And who wants to look like a fool?
Nobody wants to look like a
No one
fool.
wants to do a fool, right? So
Yeah.
what happens? People start pulling away from that strategy.
That's right.
And so it becomes less crowded.
Yeah.
And so you go in, you're early.
Yeah.
And so then when your strategy works for whatever reason, whatever catalyst, comes about, then suddenly people start coming in. And so the cycle repeats. That's why it keeps surviving. That's why a lot of, quantitative strategies means like, those computers, algorithms, they actually end up not working very quickly because what happens is that they have certain criteria.
Yes.
And then some other algo elsewhere will pick up and then boom, then it evaporates.
Yeah. And whenever there's too much demand for it, that's exactly when contrarians actually don't actually work. Because it's when everyone's flocking to the... Can you imagine it's like a honeypot? And a lot of bees are actually running dearth of honey. And suddenly there's a honeypot that comes, right? Can you imagine 20 hives actually try to...
Yeah.
That's it.
And I would add for value investing why it's so... why it is a form of superpower is because the ultimate edge I feel, and I only have like 5 years of investing experience, but the ultimate edge is that you must rely on patience, which everybody can.
It can be trained.
If you build an algorithm, let's say through a computer, only really smart, high IQ people can do it.
Yeah.
But patience is available to everybody.
That's right.
But of course, not everyone will do it because then that is a question of emotional
Control,
IQ.
yeah.
But you at least have access to that. If you are 100 IQ, you're never going to solve a complex math problem.
Yeah.
You can't, right? Because you just...
It's beyond your capabilities.
Yeah, you're just born with those genetics, unfortunately, right?
Yeah.
But that's what I think is great because once you are patient, you can do this thing called time arbitrage. Meaning, right, when you invest in a stock, you're not just looking the typical 3 months or 3 weeks or 3 days, right?
Yeah.
You're looking 3 years.
Yeah.
And nobody is looking 3 years in advance. So you're making decisions based on what something will happen in 3 years versus the guy who's like 3 days or 3 months.
That's right.
So that's a huge advantage.
The time horizon is a huge advantage.
Huge.
And actually, related to that, a lot of, I think, investing or even more so value investing is a field where IQ really doesn't make a difference.
I would have a slight adjustment there. It matters until a certain point.
Certain point, that's right.
Yeah.
More weightage is actually given to emotional control rather than IQ.
Correct.
I'm not saying that if you have an IQ of 10, you can be successful.
Because if you do not answer the 2 plus 2, then you shouldn't be the stock investor.
Correct. At least mental arithmetic, right? Yeah. But the point I'm trying to make is that the weightage of IQ or qualifications doesn't really matter for you to be successful.
Not as much as people think.
Yeah. And I think that's a myth that I wanted to also share in terms of my love for value investing. Because name me one field, especially a technically challenging field, where people can actually learn the tricks of the trade if they have the right discipline and the right emotional control and be successful at it, regardless of their background. I think you're one example. I'm another example. I never came from financially trained. So picking up accounts, picking up reading financial statements is not something that it's too much of a rocket science for someone. And ironically, even if you're not too good at it, but you have emotional control, you can attain certain levels of success investing.
And if you have a basic proven process.
That's right.
We should talk a lot about it in our one-on-one coaching program.
Correct.
But essentially, you need that process to...
A step-by-step methodology.
Yeah, so that you repeat. It's repeatable, that you can keep doing until you die, basically.
Yeah, I mean, you look at pilots, you look at surgeons.
Yeah.
Why they've done thousands and,
Why you trust them?
Why do you trust them?
Trust them with cutting your body up or flying you 10,000, 50,000 feet in the air, right?
Yeah, exactly. I mean, in my days when I was going offshore almost every 2 weeks, MJ, I usually try to get a seat right behind the cockpit where I can, in the helicopter, you can literally see the pilot because it's all the way through. It always amazes me that whenever I see the process of them going through a checklist to start the helicopter. Yeah, it's and I bring that analogy over to investing is because of the point you made about a systematic approach. Because if you get that process right, it's boring. It's tedious. It's like, gosh.
I'm sure the pilots are, here we go again.
Here we go again.
Click.
Yeah, right? Fuel check, rotor check, right?
Yeah.
But that is the one that ensures consistent success. I think that's where a lot of people get turned off, ironically, because of this repeatable process.
Yeah.
Yeah.
So I think this is the end of the podcast. Hope you guys enjoyed our very first podcast.
Yeah.
We shared with you what our story is, how we get started, why value investing, and some myths as well.
Correct.
We're gonna definitely share more myths in the future and more about value investing, more about why you should invest, more about how to invest as well.
Yep.
But of course, if you enjoyed this kind of content, please follow us on subscribe to the channel, notification bell. Make sure you follow us on Instagram and Facebook as well. We have a Telegram group. Please, it's free. Join it. And, sign up for our email list as well.
Email list, the guidebook.
Yeah, the guidebook. So, see you guys, next podcast.
Goodbye.